Welcome, everybody. Thank you for joining us today. We have loan officers, real estate agents, and others all over the country with us today. Today's topic is those darn DPAs, and the snark is purposeful. We hear all the time objections and misperceptions about down payment assistance programs. So what we have been doing for the last couple of years is gathering feedback from your peers. A lot of what you're going to hear today are best practices and strategies as heard on the street by real estate agents and loan officers all over the country, sharing with us their understanding of those misperceptions and what drives them, where the truth is, where the misperception is, but also their solutions, how they face off with those misperceptions and how they educate others to get around objections to doing down payment assistance programs and working with clients who need or qualify for down payment assistance. So we know that DPA, the idea of DPA can be disconcerting for some. We're going to overcome a lot of that today, or at least we're going to attempt to help you and your peers and your business partners do so. My name is Sean Moss with Down Payment Resource. We also have a number of our team members in the background. They are going to be answering your questions as we go. So please keep this interactive. Use the Zoom Q&A feature to enter any questions. And I'm also going to ask up front, and I'll revisit this. If you've worked with a client recently, whether you're a real estate agent or a loan officer, and they used down payment assistance, we are hunting for those stories. We want to tell those success stories. We want to tell the story of the real estate agent that was involved, the loan officer that was involved, how you collaborated, the down payment assistance program that was used, the difference it made for that home buyer. So if you've got a story like that, I'd love to have 2 or 3 of those that we can turn into a blog post, maybe use for PR, for you, for us, for the DPA program provider, and so forth. So I encourage you to share those stories as well. Throw those in the chat. You've also got our director of marketing on the line with us who works closely with our PR team. So tell us those stories as we talk about today, the state of down payment assistance. And then the crux of this is going to be perceptions and misperceptions about down payment assistance. And we're going to acknowledge them. And we're going to talk about whether or not they're real or they're misperceptions. And then we'll talk about some of the, in particular, the top 5 obstacles or objections to working with down payment assistance programs. And we're going to talk about solutions, again, as heard from your peers. We didn't make up today's content. We got it all from your peers about how they get around these obstacles and objections to DPAs. So we will also wrap this up with tools that can help you along the way and give you some next steps and best practices. And we will leave time at the end for Q&A. I'm already seeing from Sarah, from Diana, from looks like Stacy, they're sharing stories already in the chat about working with DPAs. We would love to have our marketing team follow up with you. Please reach out to info@downpaymentresource.com. We want to turn that into a story that we can disseminate and leverage that as a feel-good PR story. So let's tell those. Keep them coming. Now let's dive in. What do we do at Down Payment Resource? We track and monitor all of the homebuyer programs across the country. We've been doing this for about 15 years. We're based out of Atlanta, but we do this nationwide. We have a team of people with real estate, finance, and DPA backgrounds and expertise, passionate about helping more buyers, uncovering more home ownership opportunities. And around this data set of all of the detailed information about all of the 2,300 some homebuyer programs across the country, we've built tools for mortgage lenders to make down payment assistance easier. We've built tools for real estate agents and loan officers to educate and attract the attention of prospective or aspiring buyers. And we've also integrated down payment assistance information into MLSs for our MLS partners. So we'll talk about that when we talk about tools to help you. But ultimately, we are here to help you connect home buyers to the down payment help that they need. So current state of home buyers. What is going on with down payment assistance, or current state of homebuyer programs, rather? So of the over 2,300 home ownership programs across the country, 75% of those are some form of down payment or closing cost help. That's by far the most common type of home ownership program And we have a completely separate webinar where we essentially break down this graphic here and talk about the commonalities, the nuances, the differences, the universal requirements, and so forth. But just to give you a quick overview, of those down payment assistance programs, 87% of them have deferred payments. That means that most DPA programs don't have a monthly payment. You get the assistance, and maybe there's a balloon payment at some point in the future when you sell, you move out, you refinance, but they don't have a monthly payment. 58% of those down payment assistance programs are forgivable. So while it's still a loan, there's still a lien on the property, there's still a second mortgage, it is forgivable at some point in the future, or in some cases, incrementally over time. And then 53% of down payment assistance programs are both deferred and forgivable. So you get both benefits. And then, of course, there are some programs that are grants, a true grant, a gift at closing, no second lien, no subordinate loan. And then, of course, there are some small few that do have a monthly payment. They're just repayable seconds, but still offer the capital upfront to get into the home. And then there are affordable first mortgages, typically from your state or local housing finance agency, that can offer reduced MI costs, higher LTV financing, and other benefits. There are some mortgage credit certificates out there across the country in some states. Those are tax credits available for the life of the loan. And we do track and monitor other programs like employer assistance programs, match savings programs, community land trusts, and so forth. But that's a sort of a big picture overview of what's out there in terms of homebuyer assistance. These programs come from state housing finance agencies whose programs are statewide. That's going to be critical in just a moment. Local housing finance agencies, as well as cities, counties, employers, housing related nonprofits, Federal Home Loan Bank, their network and their member bank network, community development financial institutions or CDFIs, housing authorities, community land trusts, and more. That's the tip of the iceberg, but that's where we see these programs come from. A very diverse array of organizations dedicated to providing homeownership opportunities. Now, I mentioned every state has a state housing finance agency, at least one such entity. That means there is literally no county or no market in the country where there isn't some form of down payment assistance available. Now, this graphic shows you where the most programs are, but every state, every market has programs. We layer in all the cities, counties, nonprofits, and the other local opportunities with the state agencies so that when you're using any part of our platform, or if you just go to downpaymentresource.com and do a search, you'll see all the different layers of opportunity available for a buyer. So these programs are literally everywhere: high cost, low cost, urban, rural, and so forth. DPA programs are also on the rise. For 5 straight quarters, we have seen an increase in the volume of homebuyer assistance programs available across the country as more and more organizations or municipalities or agencies offer more programs to help incentivize people to consider homeownership and to help them in the door by offering solutions to the biggest obstacle to homeownership, which, as we all know, is by and large the down payment. So a few other trends. Demand for these down payment assistance programs is through the roof, through some of our partnerships and efforts, as well as yours. More attention on the down payment obstacle and affordability issues. Consumers are finding out more and more about these programs and ultimately are going to come to you, the real estate agent and the loan officer, to ask for you to fulfill that request to get into a home using one of these programs. So one of our primary efforts here is to give you the tools and the information you need to be able to do that. We also see that down payment assistance program providers, especially in the last 2 or 3 years and continuing today, are enhancing their programs with more assistance dollars, higher income limits, and higher purchase price limits, all of which is meant to keep up with rising prices, rising interest rates, and keep the door open to homeownership for as many aspiring buyers as possible. And then, of course, I already mentioned we're seeing more programs continue to launch across the country. And overall, 84% of homebuyer assistance programs are currently funded and active. And that number is super steady, super consistent going back years, because there is some seasonality to some of these programs. They're not all ever funded at the same time, but generally speaking, most of them are at any given point. 84% is about the right number. All of this is to say down payment assistance is still available. It is not going away. And as we all know, there's more and more attention on providing solutions to affordability challenges. A few more things about these programs. 39% of all of these homebuyer assistance programs do not have a first-time homebuyer requirement. So if you hear, oh, these programs are only for first-time homebuyers, not the case. Check and see what's in your market, because a large portion of these programs will allow repeat buyers and potentially current owners, as long as, of course, they're buying their next primary residence. From an inventory perspective, we're going to dig into this later. 30% of these programs allow manufactured homes. So you can get down payment assistance for the purchase of a manufactured home. If that's helpful or useful or relevant in your market, just know that that can expand inventory options for your buyers. Likewise, on the inventory side, 28% of these programs allow multifamily residential properties. That's duplex, triplex, quadplex, right? 2, 3, or 4 unit residential properties, presuming that the buyer owner occupies one of those units as their primary residence. So again, more inventory options, and in that case, a potential investment option for a buyer who wants to purchase, let's say, a duplex and cash flow the other unit. Interesting opportunity, right? 27% of these programs are statewide. That is from your state housing finance agency or an equivalent. Most of the rest are local programs. And in addition, there are over 300 programs that offer extra incentives for those who have served in the military, those who work in certain professions, for example, educators, first responders, law enforcement, healthcare workers. There may be hero programs in your market that expand the door to home ownership or expand options for home ownership for those targeted professions and military service people. So let's get into what are some of the perceptions, and then we're going to get into the crux of the webinar today. What are some of the perceptions out there about down payment assistance? We hear this stuff day in, day out. Given what we do, we talk to people all day long, all over the country, in real estate, finance, counseling, and elsewhere. And we hear some of this stuff all the time. Down payment assistance programs add costs. There's no margin. We can't do them profitably. DPAs add post-closing complexity and risk. Or down payment assistance program training and adoption is hard to achieve. Loan officers don't want to adopt these programs, or they're not aware of all of the programs that their lending institution offers. We hear concerns about the potential impact on approval timeline. Is DPA going to prolong my transaction? And then we hear concerns about the availability or the continuity of the funding of these programs. Are they going to run out of money before my buyer gets to closing? We're going to talk about basically all of these, because here's what else we hear. Lenders especially love the concept of down payment assistance, and to an extent, some in real estate too, but they struggle with the logistics and the economics. So we want to dispel some of those myths, and we want to address some of these things that may be truly obstacles. Ultimately, we are here to help you rethink down payment assistance. That's the goal today. We want to help you rethink those darn DPAs, to give you the insight, the confidence you need to carry on conversations and to execute on DPA deals. And we will literally give you millions of reasons to rethink all of that. But first, let's dive into the crux of the conversation today. So we have identified 5 of the top obstacles that we have heard from real estate agents representing both buyer and seller, as well as loan officers, over the last couple of years. And so let's just identify them first, and then we're going to go one by one, and we're going to talk about the issue, the obstacle, the misperception, and then we're going to break that down into solutions that we've garnered from your peers. So here are the top 5 obstacles that we've been hearing for the last year, 2, 3 years. First, inventory is limited and unaffordable. That's probably a legit obstacle. In fact, in most markets, it is absolutely a legit obstacle. There is limited inventory. We saw a lot of appreciation over the last couple of years. And now, on top of that, we're seeing rising interest rates, and that's squeezing a lot of people out. So we're going to address that, and we're going to talk about solutions to that. Number two, confusion about down payment requirements. This has lingered for a long time, but it's bubbled up, we think, as a bigger issue recently. So we'll dig into what that confusion is and how to dispel any myths about down payment requirements. Number three, sellers refuse contracts with down payment assistance. Sellers are out there, they want the quick deal, they want surety, they want guarantees. And so they may not even want to see FHA financing, much less down payment assistance. Maybe the winds are shifting a little bit in terms of sellers' willingness to accept, a little more, or to be a little more lenient, let's say. But we'll talk about that too. Number four, down payment assistance programs are going to extend my transaction. They're going to delay my closing. They're going to prolong the work. They're going to be more difficult. We're going to break all that down. We're going to, again, acknowledge what's true, what's myth, what's perhaps misperception, or just pure objection. And then number five, real estate agents and loan officers are not establishing partnerships that are conducive to pipeline growth and community building. So we'll address all of these. Wanted to give you the top 5 obstacles first. And so let's now start with number one. We're just going to dive in. We're going to start to break these down. So inventory. Inventory is limited. Inventory is unaffordable. What's the problem? We are still, for a while now, seeing historically low inventory. Days on market for a long time over the last couple of years was decreasing, meaning the pace of activity, the pace at which listings were sold and off market was increasing. So there was less time for a consumer to even try to win a deal. We also know that there's enormous demand for home ownership, not just among millennials. That was the talk of the town for a long time, right? But now we've got the next generation of potential home buyers coming up behind millennials. So we know there's enormous demand for home ownership with limited inventory, and that just exacerbates the inventory problem because there's limited supply of inventory, right? So that means we have to look at inventory alternatives. I hinted at that a moment ago by showing you some of the flexibility that's offered by a lot of down payment assistance programs. Rapid appreciation and now rapidly rising interest rates are not helping the inventory situation, and as we keep hearing, are causing owners to want to stay in the home and keep that great interest rate that they had. All of this means buyers are struggling to compete. Presuming they get qualified for a mortgage, now they're struggling to compete to win the bid, to win a contract, to get under contract for the home that they like or a home that they are amenable to. So acknowledging that the inventory issue is real and uncovering some of the factors contributing to that, let's talk about some of the solutions that, again, and I want to keep stressing this, solutions we have heard from your peers. And I'm gonna pause again here and ask, now that we're talking about inventory, if you've got a story about a buyer that used the down payment assistance program or a first-time home buyer that was able to use DPA to get into home ownership recently, what kind of property did they buy? Have you had to work with home buyers to look at community land trust properties, to look at duplexes, triplexes, to look at manufactured homes? And did that DPA enable them to get into home ownership by expanding their inventory options? Again, we'd love to hear that story. So hop in the chat and tell us. I'm seeing townhouse and condo. That's great. DPAs pretty much universally allow those. But what else? Anybody got clients working with manufactured homes or looking at potentially a duplex and so forth? Fixer-uppers. We'll talk about that in a sec. Great point there, Jocelyn. All right, so first of all, consider alternative inventory sources. What about agency owned? So there might be municipalities or nonprofits that run community land trusts or have other programs where they purchase land and develop affordable homes at cost or sell them at cost. They might have blighted properties that they purchase, rehabilitate, and put back on market, again, typically at cost. They're not doing this to profit. They're doing this to inject affordable and market-ready inventory back into the community. Who are those partners in your market? Who are those nonprofits? Where, what is your municipality doing? Where are those community land trusts? And what kind of inventory are they pumping out into the market? And we're just looking for incremental opportunities here, right? We're not saying any one of these or even all of them together is the solution, right? We're just saying, where are those incremental opportunities to find a few more options for buyers to help them get into a home. Community land trusts, a great model. We're seeing more and more attention on that. You're basically buying the home, but not the land. So you're essentially discounting the price by the value of the land. Now, there are some appreciation restrictions and resale restrictions, but again, it gets one into home ownership. So where are those community land trusts in your market? And what are they doing? What are you doing with them? Are you aware of their inventory? Are you aware of their development goals and timelines? Are you watching what they're putting out in the market? Are you monitoring for resale opportunities for community land trusts? And then, as Jocelyn mentioned in the chat, what about homes that need minor repairs? Now, we're not talking about a hole in the roof and no appliances and the bones, the guts are bad, but we're saying something that needs a little TLC, needs a little attention, needs some minor repairs, some cosmetic repairs. Are those hitting the market at maybe lower prices and presenting opportunities for a buyer who's got the wherewithal, the desire, the ability, or the skills even to purchase that home and spend the time and invest the time and energy into making it their own while working through some TLC. And then what about coming soon properties? So we're going to touch on this again when we get to number 5, but are you paying attention to the agents that are listing affordable inventory? Who's out there listing properties for sale that first-time home buyers can afford, that your clients that are new to home ownership can afford? Are you monitoring their inventory and their listings? And then, of course, we already mentioned this, 2 to 4 unit properties and manufactured homes. A lot of these DPA programs, especially in concentrated markets when you talk about multifamily, but a lot of these DPA programs will allow duplex, triplex, quadplex, as long as you own or occupy one of those units. Is that an option for some of your buyers? Now, there are some nuances there. You've got to qualify to purchase the whole duplex. You can't use any existing rental income to qualify because you're not going to have a history of being the landlord yourself. But again, if you can do that and there's down payment assistance help, does that present yet another incremental inventory opportunity for your clients to explore? Manufactured homes, typically more affordable than other types of inventory, and there can be down payment assistance help out there. So again, those are just some alternative inventory sources that we've heard of, or that we've heard from your peers, that we've had discussions about, and those hopefully can open up some doors for a few more clients to get a few more homes. And then once you do that, we're going to come back to this a couple times, those DPA customers become customers for life. They're going to start to refer you more business if you can solve for this for them. In addition, sticking with the inventory concerns, counsel buyers about what the process is going to look like. What is the competition going to look like? What are they going to face when they go make an offer? Now, that's changed a little bit now from, let's say, a year ago and certainly 2 years ago, but frame the DPA appropriately. We'll hit on that in just a minute. But let them know what this is going to take. Let them know that you're going to have to narrow down your list of must-haves. Calculated patience is a term that we heard from a real estate agent in Houston. Narrow down the list of must-haves so you're prepared to strike when the right property or a good property hits the market. But have the homebuyer education class done. Be pre-qualified. Get as much underwritten as you can and be ready to strike while the iron is hot. And then, of course, we talk about DPAs, but let's think more broadly in terms of homebuyer assistance programs. Leverage mortgage credit certificates if you have them in your market. Take a look at what your state housing finance agencies are doing with their affordable first mortgage products. So I hope that helps give you some unique insights with inventory. Now let's move on to number 2, confusion about down payment requirements. What we mean here is, I'm going to go to the bottom of the page here, that magic number, or in our view, that magic myth of 20%. According to a survey from the Urban Institute a couple years ago, and this is all still very timely and relevant, 65% of prospective buyers, which were millennial renters in that study, 65% of prospective buyers believed they had to have at least 15 or 20% down in order to purchase a home. Everyone on this webinar knows that's flat out false. You can get If you're a veteran, eligible, zero down. If you're buying a rural property and USDA eligible, zero down. There are 3% down, 5% down conventional options, FHA 3.5% down. But 76% of those millennial renters in that same survey said they had little to no familiarity with those very same low down payment mortgage programs, not to mention lack of familiarity with down payment assistance. But we're doing and seeing a lot to change that mindset and raise awareness. So we also know that home buyers, especially first-time home buyers, aren't familiar with industry terms and industry guidelines, and therefore millions of them sideline themselves. They basically self-select themselves out of the home buying process. And think of this too. When you go to a real estate search site and you find a property you like, often there's a payment calculator and it's got this great payment, and then you look at it and its default setting is a 20% down payment, which just fuels that notion among consumers that you have to have 20% down, right? Otherwise, why would all these calculators say that? So anyway, what can we do about this? We have to, first and foremost, we have to combat misperceptions among consumers. They need to know you do not need 20% down to buy a home. Yes, there are absolutely advantages to having 20% down. And hopefully when you buy your second home, you'll get there, right? But you can get an FHA loan at 3.5% down. If you can use down payment assistance and maybe get a conventional loan, you can improve mortgage insurance pricing. You can improve potentially your interest rate. So the point is, we have to combat this misperception among aspiring buyers that they think they need 20% down. And think about this too. How much effort are you putting into messaging on social media, educational content on your website, marketing emails? And how many people are getting that, receiving that, seeing all of that, and they don't react because inherently they just think, oh, that's great, but I don't have 20% down. I can't buy a home yet. So we need to get the message in front of them that, hey, by the way, if you're still lingering on the sideline because you think you have to have 20% down, let me educate you, and then give them all that education. And then let's see if they react to your marketing. Get outside your bubble. Now, we have case studies and we tell these stories in other webinars about agents who were new to market or got outside their bubble and educated themselves about down payment assistance programs, connected with lenders that were good at and offered these programs and wanted their business, and built their own real estate business with DPAs and first-time homebuyers. So if you're looking for a path to success, if you're looking for a niche, then get outside your bubble, educate yourself about these down payment programs, align yourself with the lenders in your market that offer these programs, with the DPA providers in your market, leverage their training opportunities and their marketing content, and carve out your niche for yourself. And don't be afraid to expose down payment programs to your clients. Tell DPA stories to your prospects. All of you who have put something in the chat and said, hey, I did this with a client with this DPA, that is such an awesome story for you to tell on social media to the rest of the aspiring home buyers that are looking at you as the expert. What did you just do for their peer? How did that change their life? How many dollars did they get? And you're essentially telling their story, but pitching yourself or positioning yourself as this expert who's got solutions to the biggest problem they face that they probably misperceive the requirements about. But of course, if that's not for you, stay in your lane. Right? We're not saying this is what everybody has to or should do, but we're saying this is an opportunity to carve out more business and to earn long-term referral relationships. But you can always refer out to other people. You can consult with your peers and your loan officer partners about what to do with first-time home buyers. Leverage the tools and resources that you have available to you. I already mentioned, anybody can go to downpaymentresource.com and do a search to see what's out there for their client, or if they're a consumer, for themselves. But I also mentioned leverage your local DPA providers, talk to your state housing finance agency, go to their training classes, go to their networking events, use their marketing content, and over time build up that expertise yourself. And lastly, go to a homebuyer education class and do it with one of your clients. What a cool experience for your client, but also what a great way to hear the educational content that first-time homebuyer is getting in that class, which, by the way, is often required to access down payment assistance. So they're going to have to go anyway. But if you go with them, you might hear some really cool, content, insights, statistics that you can then take to your marketing and use to address other aspiring homebuyers. So again, hope that helps. We know there's a lot of confusion out there about DPA requirements among aspiring buyers. And if we can start to educate and we reach them with the truth, then we can get more reactions and we can start to look at inventory solutions and put number one and number two together to increase the pipeline and grow the pie. Number three, sellers refuse contracts with down payment assistance. Or quite frankly, over the last couple of years, even just FHA financing. Or there was a point where it was just financing in general, right? Cash won. But winds have shifted, I think, a little bit in the last year. So what's the problem here? Let's acknowledge the problem. Sellers, especially those representing, or the agents representing sellers, misunderstand DPAs. That could be for a number of reasons. They've never done a transaction with one. So the agent representing the seller is not familiar with what that looks like and perceives there to be risk. They may have had a bad past experience with a transaction that involved a down payment assistance program. And obviously, one bad past experience can notably sour attitudes for long periods of time. However, let's think about why a transaction might go bad, especially in the last few years. Appraisal issues, right? Title issues, insurance issues, timing, the documentation wasn't all done in time, underwriting delays. I mean, there could have been any number of things that caused a delay, but I promise you universally, if there was a down payment assistance program, it didn't matter. The DPA got blamed for it. Also, what about framing the DPAs appropriately in contract offers? Sellers are looking for certainty and they associate down payment assistance with a lack of certainty. But here's the thing, if you're qualified for a mortgage, you're qualified for a mortgage. And quite frankly, we shouldn't be over disclosing anything. We'll get to that in a second about financing. But DPAs aren't framed as, hey, I don't need your closing costs because I've got this program. So you're going to net more from this transaction. That's a great value add. Sellers erroneously fear delays because of a DPA. But if you're fully pre-qualified, you've done the homebuyer education class, you've got your FHA mortgage and the down payment assistance program or whatever the scenario is, there's no reason for the seller to fear delay. So acknowledging that there is real uncertainty among sellers, but quite frankly, I believe that's the listing agent in the ear of the seller. Let's talk about solutions. So what can you do? Agents and loan officers should leverage their reputation as DPA experts. And loan officers, I'm going to talk to you for a moment. We have heard from loan officers all over the country for the last several years, and it still continues today. They will get on the phone, the loan officer will get on the phone and talk to the listing agent and talk to the seller and say, look, I do these mortgages, I do these DPA programs all day long. I'm expert at this. You signed a 30-day window. We're going to close in 25 days, just like any other transaction. Leverage your reputation, leverage your expertise to help them overcome their objections. And we've heard from agents as well that they prefer to work with the loan officers who are so savvy with these programs that they're more than happy to get on the phone and have that conversation or to establish their expertise. Also, don't fear an emotional plea. Now, stay within the guardrails, I suppose, but, hey, this is the first time homebuyer, she's a teacher, here's her offer. We'd really like her to be able to work close to the school that she's going to work in. Leverage the value of a down payment assistance program. I hinted at this a moment ago, but two scenarios here. First of all, a lot of these down payment assistance programs allow you to use some of those funds toward closing costs. If your buyer doesn't need to ask the seller for closing costs, then that's higher net proceeds for the seller. And pitch that, because they may be getting other offers that are asking them for closing costs and your buyer doesn't need to because they got that DPA. Another scenario, think about a lot of DPA transactions are FHA loans. However, with a down payment assistance program, can you increase the down payment enough, lower the LTV enough, and potentially still cover some closing costs, to open the door from FHA financing to conventional financing, meaning you drop the upfront MI, you have reduced monthly MI costs, and potentially a better interest rate. And obviously, we put down a bigger down payment, so you've got a lower loan amount. These compounding effects start to lower ratios and have other positive impacts on that transaction and the affordability of that transaction for your buyer. But in terms of, let's say, contract disclosures, that could also present an opportunity to say, okay, well, here's our offer with conventional financing. If that's going to make the seller feel better, that's another avenue for you to consider, is what can that DPA do to the mortgage financing scenario, and how's that going to impact the contract offer? So anything we can do to overcome objections or insecurity about accepting these offers, right? And then, of course, provide assurance that the deal will get done. That does mean that you need to understand the requirements of the DPA program that you're using. Real estate agents ought to be able to rely on loan officers. So loan officers, make sure you're communicating the necessity of a homebuyer education class, the timeline. Is there any sort of second review or a second underwrite that needs to be done by the DPA provider? What's the window for that? Is everything moving along appropriately? And doing so can help prevent avoidable delays. Now, of course, the borrower, has to be working at the same pace as you, right? So they need to be fully invested in getting all this done ASAP. And then just make sure that, understanding those DPA requirements, you commit to appropriate timelines. And let's be honest, maybe there is a DPA out there in some markets that does take a little bit longer. But here's the thing. Here's our view, my view. If you've got a buyer who's income and credit qualified, and with that down payment assistance program can be a legit homeowner, but without the down payment assistance program, they are not a homeowner and that transaction doesn't happen, then you literally created a transaction by utilizing down payment assistance. And real estate agents, if that's you creating that transaction and recognizing that opportunity, you're giving a transaction to a loan officer. You're giving a transaction to the DPA provider because you recognized that opportunity. But if it takes an extra 15 days, you're just going to have to be aware of that when you go out and sign the offer. The property will come, the seller will come that will accept that. But anyway, I hope this helps. So yes, there are sellers out there that might erroneously fear delays or view DPA as uncertainty in a transaction. But hopefully a lot of these solutions from your peers can help get them over that. Number 4, DPA extends the transaction. What's the problem here? I already hinted at this. Anything can cause a delay, not just the down payment assistance program. So let's look at a few more scenarios. Cash to close wasn't fully investigated up front. So, we had older bank statements and they've been sitting around for a while because this pre-app was sitting around for a while and they weren't updated. So, it wasn't crystal clear that there was a cash to close issue. Or maybe that happened and, a month into looking for a house, suddenly we get updated bank statements. We realize we need a DPA. And so that DPA application was started a month after the mortgage application. Well, they should have been started in parallel, right? But that's not, again, this is all about perspective. That scenario is not a DPA delaying a transaction. That scenario is someone who recognized the issue now found a solution and saved a transaction that was otherwise going to disappear. So again, what's the right perspective here? And then homebuyer education requirement wasn't completed. We do hear that a lot. Oh, we started a DPA and we were going to use that. We forgot we had to do the class. Now we got to go sign up and we can't do a class till Saturday, or they got to do it online, but they need a couple days. Get the homebuyer education class done before you even go get pre-qualified. Just make sure you're taking the right class for the right DPA, and talk to a loan officer about it. Have your client talk to your loan officer about it, and make sure they get the right homebuyer education class completed. Don't let that be the delay. It's super easy, and it's often just the only extra thing that's needed for the buyer to access DPA. And then, of course, miscommunication, lack of communication among parties involved. That could be an issue. Make sure that agents, you're working with loan officers that know these programs. LOs, if you know the program, make sure your agents are aware of that, and then set the timelines appropriately. So I've kind of hinted at some of the solutions already here, but what can you do? Know the DPA you're using. Set proper expectations about timeline, review periods, application process. Don't wait for the homebuyer education class. Those certificates of completion for those classes, they're good for a year. There's no reason to wait until you're under contract on a home to do that class. It's 4, 6, 8 hours if you do it online. Spread it out over a week, get it done before you sign a contract while you're getting pre-qualified, and just be ready to go. And then make sure everything else is ordered in a timely manner. Coordinate title seller lender. Agents work with LOs who know these DPAs well and who have a record of closing on time with down payment assistance programs. So number 5, and then we'll get into a few other kind of takeaways and resources for you. This one is maybe the most important. We hear all the time from agents, how do I find a loan officer who offers these programs? It is the most common question we get from real estate agents. It happens daily. It happens in every training or webinar we do. Inevitably, the first and most popular question is from real estate agents, how do I find a loan officer that can help me with down payment assistance? And in particular, they're looking for loan officers that offer DPA programs, that want to earn their first-time homebuyer business and are good at those DPA programs. Problem again, though, is many loan officers are not promoting their DPA expertise. They're not highlighting their DPA program offerings, and they're not active in their community to spread that word. So what can we do? We actually broke this down for agents and then loan officers. So real estate agents first. Talk to your current loan officer partners about which DPA programs they offer. Maybe it just hasn't come up. Maybe you hadn't had a transaction that required or necessitated or warranted DPA recently, so it hadn't come up. But ask your existing loan officer partners if they offer any down payment assistance, if so, which ones, and then you can test their knowledge. I'll get to that in a second. Ask your brokerage. If you're still looking for partners, ask your brokerage. Does your broker or do one of your peers within the brokerage have any recommendations for loan officers that are good at down payment assistance programs and want your first-time home buyer business? Also, educate yourself on a few of the DPAs in your market. Attend that home buyer education class. We talked about that and the value of doing so. Seek out new loan officer partnerships, test their knowledge. Court loan officers that teach home buyer education classes or first-time home buyer seminars. They probably do down payment assistance programs, and they obviously want that business. Talk to the DPA providers. Ask them who their top producing lenders are, who sends in the most and the best applications, who closes on time. I need a partner in my market. Have that conversation with the DPA provider. Lastly, I mentioned this earlier, court agents that list DPA eligible properties. Where are the listing agents? Who are the listing agents that are selling properties that first-time homebuyers could afford? Get on their mailing list, stay in contact, build a relationship, watch their inventory. Now, loan officers, what can you do? Become DPA subject matter experts. If you want a new channel for business, if you want a new path to referral relationships, attend DPA provider training courses, incorporate DPAs into your marketing content, and become a DPA subject matter expert. Proactively work with your corporate product development team. What does your company already participate in from a down payment assistance perspective? Get to know the programs you already have, get to know some of the other programs that are out there, and work with your product team to make sure they're onboarding those DPA programs that can give you that competitive advantage to build the referral relationships, but also to serve the borrowers that are coming and asking for help or would qualify, but for a down payment assistance program. Host virtual seminars. Go teach HFA classes, housing finance agency classes with your state HFA. You do first-time homebuyer lunch and learns. Partner up with real estate agents and co-host events like that. Get active in the community. Where are the unions, the employers, the faith-based organizations, et cetera, that you could be partnering with to build those long-term relationships and to foster future homebuyers. Leverage social media. Are you online when your agents are working? And lastly, craft an intake strategy with your real estate agent partners for these new buyers. That should be something like, or could be something like, They're going to come to me to get pre-qualified. The first thing I'm going to do is get them to take the home buyer education class. We're going to line up the right DPA, get that class done, get all the documentation in. We'll get them pre-approved, we'll get them underwritten, and then we'll issue the pre-approval letter and they can go sign a property, but the class is done, they're ready to go, they've been educated. So again, hopefully that helps. Agents, LOs, connect. I'm going to show you an environment here in just a minute where you can do that. But to recap, top 5 solutions to eliminate obstacles: explore creative inventory alternatives, manufactured, 2 to 4 unit and so forth, community land trust, all of that. Confirm for aspiring buyers they do not need 20% down. That message has to be in your marketing content. They need to see it in order to have a conversation with you. Otherwise, as you're seeing, there are a lot of people on your lists that aren't reacting. A lot of people on social media that are seeing your messages, but they're not reacting. Make sure they're not suffering from this misperception that they have to have 20% down. Leverage the value of a DPA. Frame it appropriately. How can it impact mortgage financing? Can it help cover closing costs? How can those things help you improve the likelihood of your offers being accepted? 4, set buyer expectations and prepare early. Get the class done. Make sure they know what to expect. Help them compete. And lastly, be innovative and creative with your partnerships, agents and loan officers. Talk about DPA, craft that strategy, make sure you know how you're going to partner up with first-time home buyers, and start to leverage your existing prospective audience, but also start to creep into new audiences and spread the word that you can help. And as a bonus, join the Down Payment Insiders, which I'll talk about in just a moment. So I told you I would give you millions of reasons to rethink down payment assistance. Well, here you go. We have analyzed almost 4 billion with a B in declined loans. We found that 33% of all declined loans were salvageable or recoverable with down payment assistance, because 33% of all declined loans were eligible for DPA and were declined for a reason that DPAs can address, namely cash to close, which is obvious, but also qualifying ratios. Down payment assistance programs can help reduce qualifying ratios in a number of ways that we've hinted at in this webinar. In those analyses of declined loans, we saw that all of those that were recoverable, the average LTV reduction was 6%. 6% average loan to value reduction, which again compounds to lower qualifying ratios. And we did a study a while ago, and we were part of a study a couple years ago, found that across the country, 68 million homes qualified, residential homes, qualify for down payment assistance or home buyer assistance programs. 68 million homes. And then as part of that Urban Institute study that we looked at earlier on, they also found that 32 million renters were mortgage ready at that time. Yet many think they don't qualify. And why is that? I gotta have 20% down. That's the misperception, right? So there's millions of reasons to rethink DPA. There's a ton of opportunity out there. There's plenty of room for everybody to play and grow the pie. And I'll leave you with this before we get into a couple of resources that can help you. I haven't updated this in a couple of months, but we looked at the homeownership affordability index from the, what was this? The Atlanta Federal Reserve, I think. And what we were looking for was, what's the average debt to income, housing ratio, given current prices, current interest rates. And you can already see we were looking at interest rates in the high 6s by September of last year, by September of last year, 7 months ago. And so debt to income is what I want to point out here. A year and a half ago, the average housing ratio at 3% and prices at that time was 32, 33%. Already getting up there, right? But look at it as of about 6 months ago, 46%. Down payment assistance programs can help mitigate this obstacle, but this is a challenge that buyers are facing. So bearing that in mind, think about all the different ways the DPA can help and talk about that with aspiring buyers who haven't gotten pre-qualified and aren't engaging in those conversations. And always remember, those DPA customers become customers for life. You can get their permission to tell that story to other aspiring home buyers, and also they will be sending you referrals because you solved for those obstacles that they felt were in their way. So how can we help you? We'll give you some tools. First of all, Down Payment Insiders. We have a Facebook group called Down Payment Insiders. There are over 11,000 real estate agents, loan officers, housing counselors, DPA providers that are part of that Down Payment Insiders Facebook group. They are all socializing around best practices working with DPAs, marketing to first-time home buyers, working with down payment assistance providers, and networking, finding agents and loan officers finding each other in their market, and agents finding those LOs that participate in DPAs and are good at them. Loan officers finding agents working with first-time home buyers and acquiring more purchase business. We're seeing a lot of networking there. So join the Down Payment Insiders group. And I see that Mel has just posted that link in chat. So go to chat, pop that open, and check that out on Facebook. Down Payment Connect. This is a lead generation tool. You can find it at downpaymentresource.com/DPC. Down Payment Connect, there's a version for agents and a version for loan officers. All of you get your own personalized landing page where consumers can come search for down payment programs, where they want to buy a home. It comes with marketing tools. The consumer doesn't see all the details of the programs, but they see the nature of the opportunity out there for them, and they connect directly with you. So it is a lead generating tool for you. You're not buying leads, but you get the leads off of your landing page exclusively because it's your landing page you are licensing. Loan officers, you also get a detailed directory of all programs in your state or states, up to 4 of them. You can customize which programs display based on which programs your company participates in, and you have comparison tools and back office searches and more. So again, downpaymentresource.com/DPC. However, if you are a member of any of these MLSs, please do not go pay for Down Payment Connect. You already have it for free. Houston, Jacksonville, Florida, California Regional, Greater Alabama and Birmingham, Spokane Association of Washington, MyBoard in Indy, Austin in Texas, Northwest MLS, Seattle, in Richmond, Central Virginia Regional, RealComp in Detroit, One Key in New York, Greater Lansing in Michigan, First MLS in Atlanta, North Star in the Twin Cities, MLS Penn in Massachusetts, Stellar in Florida, Sabor in San Antonio. If you're a member of any of those MLSs, not only do you have Down Payment Connect for free already, you also have down payment assistance data integrated into your MLS system. Look for this button on listings, both agent and client views in your MLS systems. Click on it, and we tell you right there inside your MLS what programs are available for that property at that location, at that price, at that time. So again, here's the MLS list. If you're on here, don't pay for Down Payment Connect. Go to your MLS dashboard, click on Down Payment Resource, and grab Down Payment Connect for free. Lastly, lenders. We have a number of tools in addition to Down Payment Connect. These are sort of the enterprise tools. So if there are any enterprise, product development, secondary, CRA folks on here, or if you want to get your company involved, we offer a DPA directory that is all in access to everything across the country or across your footprint, all the detail you need to start onboarding, approving, and monitoring and tracking DPAs, as well as a portal for LOs, for underwriters, and a lead gen portal that consumers can access. So happy to talk to any lenders about that as well. I will put our contact information up on the screen. We left a few minutes for Q&A. I see that Zoom and Q&A have been busy. So Mel, I'm going to let you spearhead this. Any trends we need to address, any consistent questions you're getting. And while we do that, one last call. Tell us your story. If you closed recently with the DPA, we want to know that story. We want to help you tell that story and leverage that to educate others. So one last call for those in the chat. And Mel, Q&A, what do we need to address?
Yeah, we've had such a fantastic group today. I do want to start out by just reminding everyone, we did record the session. We had a lot of people asking about that, saying, they were multitasking, which is perfectly fine. We did record the session. We'll be sending that out tomorrow, along with the slides. And then also some helpful, a lot of you ask about links, to some of the specifics that Sean talked about, like Down Payment Connect, the Insiders Group, etc. Don't worry, that'll be included in the email that we send as well. And just as a comment, we've had a ton of new agents posting in the chat saying how helpful this information is. I will also make sure and include our education page in the follow-up tomorrow, because we really have some great sessions. We have some previous recordings of those sessions as well, but I would definitely encourage new agents, if you want to know more about DPA, our sessions are free to join. We have a DPA 101 session that's excellent, that talks more in depth about the program. So just wanted to put that out there, since we've had so many new agents on the calls today. As far as common questions, I'm not honestly sure I have any, Sean. We still have them coming through in chat and in the Q&A. I mean, we've had some really good questions today, but I'm not sure there's been a theme for me. I know Veronica has been answering some too. Maybe she has some themes, but just really, really good questions today.
Well, so let me do this then. I see a few left in Q&A that haven't been answered. I'll walk through those, but I want to point out a few people. Israel, you closed a $500,000 house for a first-time home buyer and used DPA. Here's our contact info on the screen. We want to know that story. We want to tell that story. And guys, this is to educate everybody else. The whole point of this webinar is to dispel myths and overcome objections to DPA. Israel, you've done it, and we want to tell that story. I saw so many more of you submit these stories. Gosh, I could never find these in chat now. There's so much in here. Alyssa, your client received $50,000 from Invest Atlanta last summer. You were the realtor, and you named the loan officer. Alyssa, we want to hear that story. info@downpaymentresource.com. Jacqueline, my client felt comfortable with the down payment program, which ensured they would not allow you to pay more for the house. It kept them within their budget. Jacqueline, we want to know the story. I see more of these. Kathy Delbridge, working with a client right now that's using a $25,000 DPA. Please reach out to us at info@downpaymentresource.com. Let's turn that into a teachable moment for all of those who still object. You guys are the practitioners. You did it. You got to closing. Let's tell that story. So I'll go through a couple of these remaining questions in Q&A, and we will spend a few minutes here. Let's see, Mary, in the past, when I bring my friends to the loan officers, they connect others with the purchase opportunity, and we lose the house to an investor. Can you recommend any loan officers we can trust? Mary, go to your State Housing Finance Agency's website. You can find all this on downpaymentresource.com. Just do a search in your market, look at the programs and see what's out there. But talk to your State Housing Finance Agency. Talk to the DPA providers in your market. Find out who they work with, and build relationships with them. Quid pro quo. I'll bring you the buyer. You get them pre-qualified, and you make sure that they come back to me with a pre-approval letter. Jill, MLS PIN. Yes, they are DPR partners. You do have access to Down Payment Resource inside. Look at the agent listing view and agent detail view. As with anyone else, I'm seeing LIBOR in New York, part of One Key. All of you, if you are a member of one of these MLSs, I'm going to put it back on the screen, then you have access to down payment assistance information when you're looking at listings inside your MLS, whether that's Matrix, Stratus, Paragon, Flex, Dyna, whatever you're on. This is the button to look for, the $ with the check mark. It'll be on the agent list view in most cases. Paragon, I think you have to open up the action button, the little plug. I'm trying to think to help all of you. But generally it's on the agent list view and or the agent detail view, and your clients will see it as well. Let's see, Andre, thank you. Kahinda, can we share the slides? Yes, we'll share the slides in recording. Kahinde, we'll get the slides to you. Katie, thank you. Joyce, yes, you'll get the information. Jessica asked, how do you get ahead on the DPA requirements when you don't know what neighborhood the client is buying in until an offer is accepted? Jessica, that's a good question. So Jessica's kind of breaking this down to the neighborhood level. Here's the thing. Your state housing finance agency, their programs are statewide. It doesn't matter what neighborhood your client is buying in. As long as they're within the income and purchase price limits and they qualify, they can buy in any neighborhood. So a great starting point is, what does your state housing finance agency offer? And Jessica and any real estate agent, partner up with your loan officer to learn some of that, but also the state HFA, Housing Finance Agency. Then, if there are programs from, let's say, the county or a nonprofit that covers the county, that's countywide, right? If there's a program for the city, it's citywide. So neighborhood in this sense doesn't matter in terms of eligibility, geographic eligibility. So I would get to know what the state offers and see if there's a county or a city program or maybe a nonprofit program, and just get savvy with one or two or three of those. But definitely work with your loan officers and loan officers. You're seeing it, you're hearing it. There are agents on this webinar wondering how to connect with you. If you offer these programs, you need to get out there and tell people, join Down Payment Insiders and let agents know that you're out there and you work well, do these programs. Let's see. Maria asks, is the HERO program the only one in Florida? No, there are almost 200 programs in Florida. The HEROES program, the Hometown Heroes, is one of several offered by the state of Florida, Florida Housing Finance Corp. And then there are almost 200 others. There's a lot of programs in Florida. There's a lot of programs everywhere, guys, but there's a lot of programs in Florida. Let's see. Let's see. Patricia, can we get more info about the programs with people that are not first-time home buyers, specifically in Texas? Patricia, yes. Start by going to downpaymentresource.com. Do a search in any city or any county you want, and you'll start to see what's out there. If you're a member of Houston Association or Austin Board of Realtors or San Antonio Board of Realtors, you have all this inside your MLS, Patricia. Let's see, Jacqueline, do we educate the loan officers or do they already know about the programs? It's a two-way street, Jacqueline. I mean, you might be going to loan officers and saying, hey, we've worked together for a long time, but I got to start working with these DPAs because I got to grow my business. Here's what I need you to know if you want that business. And the LO will hopefully, being a good partner, will take it upon themselves to make sure they can offer those DPAs and they become savvy, or at least find alternative down payment options if there are other programs they may already have access to. But Jacqueline, great question. That can go both ways. Real estate agents, you ought to have loan officers in place that you can trust and rely upon to get these transactions done. But we also want more and more loan officers getting involved. So there will be loan officers who are new to down payment assistance and learning the ropes and trying to become those trusted experts. So with that, we've actually gone over here. I want to be conscious of everybody's time. Thank you to everyone who reached out with a story about working with a buyer. We want to know those stories. We want to help you tell those stories. So again, let me put our contact information up on the screen. Please reach out to us. Our director of marketing and our PR team would love to turn that into some PR, a blog, an article, a press release, anything we can, training material, case study, anything we can do to help you spread the word, but to help others learn how to do this stuff right. So info@downpaymentresource.com. Thank you all for joining today. I hope this was helpful and we will see you soon.